You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host as always. We've got one of the most impactful, important real estate agents in the industry, a stalwart and grandmaster who's been in a number of times. He's someone we look up to and love listening to his on-the-ground anecdotes. It's Shane Beaumont back in the studio. Shane, thanks for coming.
Thanks for having me, Trent. Great to see you.
It's been 6 months since your last time in here, and hasn't it been an interesting 6 months on reflection when last we were in December, coming into Christmas, reflecting then on what was possibly going to be the inflection point, or what possibly was the inflection point of our really booming market that saw 24% growth up to the middle of last year. And as you called on this podcast, the Stockholm market lifted from 3,500 to 5,000, which again, still totally undersupply, but it happened. And we were in a point there wondering what was the next move in WA, and we're quietly confident just based on the existing undersupply, but also recognizing that the direction was going back towards balancing rather than overcooking even further. And it's been an interesting 6 months in the first half of this year with tariffs and 2 elections and the highest interest rates we've had in this cycle. So yeah, I think it's a good time for us to start to reflect on what the last 6 months has been compared to last time we reflected.
Yeah, we did expect the stock levels going from 3,500 to push through that 5,000 or 5,500. What we didn't expect is to see actually pull back to below 5,000, which, I know we spoke off air, like trying to work out how that happens when obviously there's limited supply being created. But I look at the numbers and I think we see obviously still a huge immigration, Perth still being affordable, less affordable, but not unaffordable compared to other capital cities. And I think a lot of that property now, because there is confidence in the market, talk of those interest rate cuts, the people that probably were selling, in speaking to them at the moment, a lot of them are actually saying we're going to hold.
And that, I think, talks to the data as well. One thing you didn't reference there is just our transaction numbers, because what it has to be is people not selling, because the same amount of people are buying every week in the last 6 months as the 6 months before. It's about 900 to 1,000 people a week. So the only way in the demand side that we would see Stockholm market drop is if we were now 1,100, 1,200 a week. Then you go, oh, shit, it was demand. More people demanded, the same people supplied, therefore stock went down. That wasn't the case. Demand's the same. It's still record highs, 900 to 1,000. But Stockholm market's dropping, which means one thing, less people are listing with real estate agents and selling properties right now.
The main thing we're finding, and hearing a lot of conversations with our team, obviously from the 3 offices, we have people working all different sorts of markets. So often you're hearing them say, look, I have people ready to go, but they can't move until they find something. So what tends to happen is people go, look, I'm going to start looking, and then they can't find that property. So they go, I'm going to pull back, I'm going to wait, because subject sales at the moment really aren't getting a look in. They did for a while there.
We were reporting that they were getting, they were starting to get a look in.
Exactly, and that was between the December probably through to March. But at the moment, what we're really seeing is, again, happening where buyers, or eventually, which are sellers, go, you know what, I'm sick of being gazumped by a non-subject to sale. I'm going to take a leap of faith. I'm going to go to market, sell, negotiate a 60, 90-day settlement, knowing that I can act and get in there. And that's started to happen again. So the biggest thing we're finding people saying is, I want to sell, but I've got nowhere to go and I don't want to be homeless.
Feels I've never had like we were there a year ago.
It is exactly that. I've never had a client homeless, but laying there at night thinking, what am I doing with my 3 kids and what have you, that's a pretty stressful thing. So speaking to them a lot about that and guiding them through that process, eventually they're finding sooner or later they do have to come to market, but you're starting to see a lot more off-market transactions happening, especially in the higher range, I would say 2.5, 3 million plus. You're seeing a few off-markets actually happen because maybe the conditions around the sale are more favourable for each
mobility.
Party. That's right. That's what we're seeing. So the stuff under 1.5, there's a plethora of buyers. And whilst it doesn't feel like there's a huge amount of stock, there's actually been a healthy enough supply that people are getting properties under offer in the first couple of weeks for good numbers. Michael Jennings sold, I think, 3 in a row for record prices in Melville on half blocks, up around 2 million.
2 million Melville.
2 million Melville, yeah. And then
that was the price point for Adderall only up until a year or so ago, really.
And then you get those breakout sales, like obviously the one Vanessa had, which was sort of 2.7-ish in Melville. Not the typical home you'd see in Melville, I might say, but nevertheless, that sets a new benchmark. That gets people talking. But the mobility thing is, where do I go next? How can I make it happen is probably the biggest talking point.
See, that's a shame for just the market on a unbiased space in general, Shane, isn't it? Because it's not great when a market doesn't have mobility. And I was under the impression that we were improving in that space, or that we had improved in that space in the second half of last year, and that whilst for those who want their house prices to go up, that increased level of stock makes it a little bit harder to see 24% a year. The benefit of having an extra 1,500 properties on the market each week is that there's more mobility. People can have a bit more choice, which is not a bad thing, especially when we're still seeing double-digit growth anyway.
I think if there wasn't the talk of the interest rate cuts, so we haven't seen it impact in growth right now. We haven't seen it, I don't feel. But what I have seen is the confidence in the market for a lot of those people that were maybe selling, because instead of it costing them $3,300 a month, it's now costing them $4,500 a month, and the rent hasn't gone up. But if there's talk of those interest rates coming down, it becomes manageable again. And I think you'll start to see people hold on to those properties a bit longer because they are expecting growth. But for a while there, most of our clients that were selling were Eastern States people that had been in the market for 24, 36 months, doubled their property price, like literally doubled from what they paid, and their home back east, that their mortgage was maybe 1.5, was the one that was really putting some pressure on them. And they're like, look,
coming off a fixed rate back home,
I don't want to sell that home in Perth. I think it's great, and I'm renting it for $580 a week, and I paid $300, but this is going to help me back home. And that seems to have eased a bit too.
That's an interesting observation there, that there's a lot of reality there about maybe a first wave of East Coast investors who are listening to the YouTubers over in Sydney and Melbourne. They were calling Perth, and that Melbourne was a place to go. Laughable. But the interesting point to make is that people will listen to that, and therefore we did see an increase of stock on market for a bit.
Definitely there's a shift there. So the people that are selling at the moment are looking at other opportunities as opposed to I'm taking money off the table. So we are seeing a bit of that at the moment.
Reinvesting.
Definitely reinvesting, whereas before it was like, look, it's doubled. I've done really well. I've never been to Perth. I'll just take some money off the table, and then no talk about getting into the market. But we're seeing a lot of those people that are over east now, whatever's happening over there, saying, well, look, I'm going to sell, but I'm going to do this. And we had several chats over the last 2 weeks where guys had sold and they'd already put offers on properties over there. So they're obviously expecting their market to go again. There's an opportunity to get in there. So shifting the money as opposed to just taking it off the table.
You probably would have sold about 100 properties in this last 6 months or close to. Out of that 100, if we can use it as a round number, what would the split be between people who are investors and people who are owner-occupiers?
I would say 60-40. So the 40% that are the owner-occupiers, the reason that's not bigger is they still have to buy back into our market. They're not taking money off the table. The Eastern States investor, if they're selling their home here, they still live in their residence. It's not changing their lifestyle. So there would be a few more transactions taking place in Perth if they knew they could get into that next location or that aspirational suburb. But if they can't, they're not going to come to market.
It's nearly self-fulfilling here that the reason we have mobility issues again is because we only have 4,500 properties on the market. But the reason we only have 4,500 properties on the market is because people have mobility issues.
Yeah.
And so that's what seems to have been dropping that number.
But that 45, it's a good point. What people talk about when they say 4,500 properties on the market, the breakdown of that, what is actually housing and you can live in tomorrow, isn't 4,500.
No.
So when you actually look at that and you look at 950 on average sales a week, realistically, if nothing came to market, there's less than a month's supply of property available.
And I don't know if you've seen this before, Shane. I reckon you're mentioning this because you have. That stat of sales months is something that they talk to very acutely in America. They talk about sales months all the time. There's 4 sales months in this market. We're pretty much at that point, and we have been for a while now, where it's 4 to 6 weeks, like 1.5 sales months worth of stock. And there was a time where it was like 30 weeks.
Mandurah, I still remember at one point there was 4 years supply of property in Mandurah.
There you go. And the reality is for us, we've sold another 1,000 properties this week, and we now have only 4,200 properties on the market. So in the last month, we've gone from 5,000 to 4,200 properties as of today. 4,200 was, I think, August last year. We were chipping up to that. It is getting worse and worse. So what we know is that we had, again, the same amount of demand last week as we have for the last year, really. But 250 people less this week than last week put their property on the market. That is not sustainable. We are going to start getting back into that 3,000s very quickly where it's FOMO. People are putting offers everywhere on stuff they really don't want.
And when I look at that type of buyer that must buy if they've sold the home, you're exactly right. They are compromising or having to look a bit wider on what they originally set out to. And sometimes that's fine, but for a lot of people it's not ideal, and that's when they are pulling back and going, I'm just not going to sell.
Honest question for an honest answer. Did you think we would be here in this position?
I didn't, but I still can't understand how we are. Where is the stock?
Yeah, why isn't it coming?
Where is it?
We have
Yeah.
ideas, but it doesn't make sense that we're in this position.
Yeah.
I'm very honestly on
Yeah.
this podcast as someone who's supposed to have a lot of the
Yeah.
answers. So are you
Yeah.
going, I thought we'd be at 6,500 properties on the market, maybe
Yeah.
7,000
Yeah.
right now.
Anything under 10,000, I still think is seller bias,
Yeah.
but healthier. And when I say healthier is some of the offers we're having to get over the line, the seller's like, look, Shane, I've just missed out on that particular property, so I'm thinking about taking it off the market. So they've gone, well, I don't want to sell now. But then they get an offer at 700,000 and they were expecting 650. They're like, look, Shane, at that level, I'll make it happen. So I don't think it's good for sellers or buyers sitting in that space because not everyone can make that happen.
That's true. And this is where the fabric of society keeps falling away, where capitalism and the free market aren't supporting those who don't win the game. And it's just getting further and closer to Sydney level problems that we were pretty proud not to have, to be frank, for quite a while. When we talk about the type of product that's selling really well, what we were transitioning through last year was everything selling quickly for cash, even if it's not very good, to having a conversation about if it's priced fairly and it's good product and it's fairly new, it will do really well. If it's a bit shitty, you might be on the market for a couple more weeks longer and you might have to be realistic. But when we start getting back into these stock on market numbers again, where does it look right now for you, at least in relation to that assumption?
As far as what's the most desirable product, anything modern at the moment, and that be, when I say modern, if a 2015, 2016 villa is still realistically one of the new kids on the block because nothing else is being built.
Yeah, true.
So liquor paint, they've all got stone tops, typically higher ceilings. If it's well presented, window treatments are good, doesn't smell of cat or dog, those things, you'll get a great result. Because
in most
it is
suburbs?
In most, I would say at the moment, all suburbs, because you're not competing with the masses. For so long, if you look at, let's say, Belmont, why would you buy an apartment? Because next week, another one's coming out the ground. Same zoning, so it's the same size, same spec relatively. So as that supply hasn't come on and that demand's been there, it's chewed through pretty quickly. So what we've seen, and we picked it when we spoke to you a while back, we told a lot of our clients that own strata title properties, if it was modern, do not sell. Do not sell right now because you're expecting phenomenal growth because you are the newest kid on the block. Before, no one had any money because we're in negative equity. They couldn't paint it. They weren't updating them. We're saying to them, get it painted, get it presented well. And we just had one sell, which they paid $240 a few years ago, $240 for a 3x1 street front villa, and we've just sold that for $615,000.
Which suburb?
In Gosnells.
Yeah.
Street front, 3x1. She renovated, beautiful property. But that, at the moment, there is nothing else to compete with that. There's nothing being built.
There's not many people that have made 260% on their asset, whatever asset that is.
Yeah. And that was a downsizer.
And it would have been returning for pretty good rent.
She wasn't
as
an
well.
Eastern States investor. She's, look, that seems cheap. I've got enough room for my caravan. Was moving from Cloverdale to Belmont at the time, going to a lifestyle village, which, funnily enough, have amount of people got going to those at the moment because they're new product, literally brand new. So the couple of options out there are brand new, but they've got the money to afford to do it. Because for so long, those 1,300 square metre blocks...
worth nothing.
They were nothing. They got down to 325 was the lowest one. That particular owner, 2 years earlier, paid $550, got DA and cleared the site and sold for $325.
Yeah.
Like, where are you going to go to retirement village?
Where are we now with the block like that, with the development block?
800,000.
800,000 in Gosnells.
800,000 for 1,300 square metres. 750 at 800, depending on the quality of the home.
Is that developer going to develop? Is there money in it?
No, there's no money in it.
So what's the point?
They're
Why
gonna
go pay $800,000 for a piece of sand in Gosnells that you're not actually getting a profitability out of your FISO on?
I genuinely believe the fact that the amount of talk from the government about what is going to be built eventually. Now, you speak to anyone, they don't have to have that much political know-how. I don't know who's going to build them, which is first
At least not in WA.
Not in WA. But I genuinely believe when you look at those areas where they are relatively close to the city as this urban sprawl continues, which is what we love in WA, that will become realistically inner city living. It's
so he's
close
just punting on the future, and he's really deep-seated belief in Perth generally.
Generally Perth, that's right. Not a suburb in particular, but the logistics of it, half an hour from the city, good schooling, not far from the airport. What would that be in any other capital city across Australia? Probably more than that. Or probably take out Adelaide. Probably most places that'd be worth more. 13-unit site or a 6-lot development for 800,000 with a home renting for 700 a week. It's not too far-fetched.
No, just got to get some bricks on there. That's the big challenge for everyone, which is why the newer product is doing so well, even if it's not brand new.
Yeah.
conversations you're having at the home opens at the moment with regards to who your buyers look like and their tolerances. Now, you touched on this a little bit with regards to interest rates, but from a seller's, owner's side, are you seeing people starting to revise offers or similar profiles starting to pay for more for the similar product because of rates and expectations of rates right now, or is it not filtered through?
It hasn't filtered through yet. And that's why, look,
So the last 3 or 4 months you're suggesting has been a fairly stagnant price situation?
It's just started to pick up more the confidence in that, but we haven't seen that reflect on price just yet.
Yeah, well, that's what the data from Real would say, that the last 3 months has been pretty sideways, but anyone would have picked that in double election tariff time as well.
But I think if you look back in 12 months' time from now, which I'm sure we'll chat again, you'll find the lull was, I believe, November to end of Feb. Now, everyone says, oh, that's Christmas time. Those days are gone. Like, it doesn't, it's not as seasonal like
for
it
the
used
last
to be.
5 years, Feb has been the highest growth month in each of the last 5 years. It was quite interesting how this year was the first time it wasn't, but we know why.
Yep.
It was affordability in a lot of suburbs, as well as fear on tariffs and elections coming up. Now that's out the way, I think most commentators worth a grain of salt have always said that it will be the second half of this year that we'll see the nominal growth coming through. What none of us really thought was that it was going to be supported by a continuing drop in supply, given that we know we're building a few more homes than we were last year at the very least.
The cheeky buyer seems to have disappeared over the last 3 or 4 weeks. They were popping up. Here's my offer, market scope, and I'll be coming in lower next time. They were popping up.
That's interesting.
Yeah, they were really popping up, as they do. And there's a place for them. Like, they are taking a punt, like everyone else. They're not getting caught up in the hoo-ha. They think it's going to go a certain way, and all numbers at that time suggested they would be right, but it kicked again.
Yeah. So going forward in certain segments, obviously you focus a lot in that below $1 million space. Yep. It was below 500,000 a few years ago in Gosnells, but you obviously run a high-performing team of people that are certainly in the 7-figure space. Which segments do you believe are going to benefit most from the rate cut environment, which seems to be driving most of this next phase of expectations?
Because it's been so competitive up to that $1.5 million range, it's actually pushed beyond the million. I think they, on the back of these interest rates, rightly or wrongly, I think will stretch themselves, and I think that'll start to continue up into the twos. The entry-level stuff, when I say entry-level, anything sub-median house price, the impact of interest rates, people are on good money in WA. Accessibility to buy with low deposits has been easy for quite a while.
So they could already afford, is what you're saying?
That's right. So I don't see any impact there. You might see investors come back in a bit because the yields are more attractive, but I genuinely believe it's that family that have good jobs.
Second quartile money.
Yep. And they're going to go, look, I've sold my villa in Bicton for $1 million, or my townhouse, and I want to live in Bicton. It's where I want to be. If I have to pay a bit overs now, I can stretch myself.
Yeah.
We're
so
not
get
going
the bigger
anywhere.
loan with the bigger equity they've had.
Yeah.
It's exactly what I've been saying, which is great to hear, Shane, over the last 5 months, really, that this year will be amenity. Amenity. People will be focusing on upgrading rather than specifically upsizing, but upgrading their lifestyle, whether it's in size or location. They'll take their equity that they've made in the last few years, if they were lucky enough to be in the market. They'll stretch themselves again with lower interest rates, because it should be similar outgoings in terms of monthly costs to get where they always wanted to be if they didn't get that opportunity back in 2021 when rates were at 2%. Will you agree with that?
Yep, 100%. Yeah,
what about the top end of the market? Obviously, your business partner, Sean Hughes, works very much so in that $3 to $10 million space, probably you'd say, right? Yep. How's he reporting?
There's a lot of moving pieces in that end of the market. So if you look at like Lego, things have to work. Like, I've got to get into this property. I need to make that work to get into here. So I hear him on the phone. There's 3 properties always moving with that one move in theory, because whether it be a $3 to $4, $5 million property, I need to get into that. So that's where that off-market space we're seeing a lot more, because the mobility factor.
The settlement chain you're talking about.
Exactly. And he handles that really well. I know what he does in the background.
You're connecting people at that price point, aren't you?
Yeah, exactly. And I think the more trust and rapport you can build in that space where they've seen it happen. When you say, look, 19 Johnson Street guys, they're in the same predicament as you. We did this, we found them something, we got them to the next space. But if we don't make this initial move, nothing can start. The better agents, and there's some phenomenal agents in Perth that have those relationships typically over time, and they can roll those stories out to go, this is how we can do it. This is the roadmap.
Connecting the dots.
Yeah. And it's not just who's going to get me full page in the post and this sort of stuff. It's actually genuine connection to the agent to go, can you get me through this situation for my family to where we need to be?
Are people sensitive to rates at that price point?
You would hope not. But again, I think probably not at that price point because a lot of them are cash deals. There might be borrowing in the background, but I think you've got more solid foundations. If you are seeing the interest rate cuts, it's probably their return on their money in a bank that's being impacted more than anything. So it's
mobility again, really.
Mobility again, 100%. And those negotiating of terms to make it happen, whether it be longer settlements, whether it be rent backs, these sorts of things. One thing when I look at across the group and always speaking to agents, and I've noticed it myself, the areas when you were growing up, when I say me growing up, that seem to be the cherry or the gem everyone wants to get to, it's really come back to a lot of that walkability factor, those little communities within suburbs. Mosman Park, for example, there's different pockets of Mosman Park. Treagle on the coast, there's different pockets, but people really want to be in those little hubs. So some of the price points, when you're looking at them, you'll see a big discrepancy between the same suburb, but that particular pocket.
Got ya. So the house could be nearly the same. The orientation could be the same. The age could be the same. The suburb's the same, but it's 600 metres that way, which makes a big difference in that suburb.
So the walkability, and I use Glyde Street in Mosman Park, that little precinct there is extremely popular. It's buzzing. It's great. The walkability factor is awesome.
That's improved, actually.
Yeah, it was just a ghost town. There was tumbleweed. There was tsunami and there was nothing else. So things like that, I've found when you're looking, Subiaco, great example. Obviously, as that's shifted now the other end of Rockaby, it's not just the suburb, it's pockets within the suburb. So when you're speaking to those top agents who work those areas, really make sure they know, and I'm sure they would, know the property sales that have happened around there as opposed to just giving you 5 sales of Subi.
Saying Subi,
they're just not all the same.
Let me ask you some quick fire questions. We'll have a chat probably around Christmas, as we like to do, just before we go on our break. And I want to know what your thoughts will be on a couple of these metrics. Supply, will it be higher or lower than it is today?
It'll be higher.
Okay.
We'll say 6,500.
Okay, cool. I love that you're putting a number there, which is still mentally under supply. I'm still surprised every week, to be frank. Interest rates, will be higher or lower than today?
They will be lower. Just on that, make no mistake, people talk about confidence levels in marketplaces. If interest rates were state by state, our interest rates would not be where they are.
It'd be 10%.
And likewise, when Sydney was flying. And so when I speak to a lot of people, and they're like, oh, mate, they must be concerned. Think about the amount of sales that take place in WA compared to the rest of the country.
10%.
It's not enough that's going to impact. So enjoy it while you can. Over East, it's not as fun.
We get tarred with the same brush as stuff that's happening over East, for better or worse. And currently, it's for better.
It's definitely.
Enjoy it.
Yeah.
Okay, weekly transactions, will they be higher, lower, or the same?
I think you'll see 900 a week.
And median house price across Perth?
That one there is not going to stop. I would not be surprised to see it sitting at mid-8s by the end of the year. Obviously, currently at 775.
Depending on who you ask.
Yes,
So another 10%. So the 10% that we thought we were going to make this year is going to happen in the next 7 months.
But I genuinely believe there'll be pockets of areas that'll hold, not decrease, but hold. And there will be some areas that you'll actually still see phenomenal growth. They're typically going to be anything under the Perth median house price.
Yeah, because there's a space there.
There's a space there and there's nothing else below you.
Shane, love the chats, love the honesty, and I always love the detailed thought. There's not many agents in Perth, probably none that I can think of, who think about property and the transaction the same way that you do, which is why you're one of the best, mate. Thanks for coming in and thanks for always supporting the podcast.
Nice. Thanks, mate. Thanks for the opportunity.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!